All right, hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel. Sorry, a couple minutes late there. I was getting a movie ready for my daughter, so she's not making a whole lot of noise during our live stream. But thank you for being here again. I see a lot of people already in the chat talking back and forth. I love that. Love the community and the engagement we get on these videos and on the regular ones as well. But love our Sunday live chats. Grab your favorite adult beverage or whatever beverage you're drinking, and we'll get started here. But I love these for just being able to, reach out and have that kind of closer, personal, face-to-face connection with all you on Sundays. Be able to answer your questions and talk about making a little bit of beer money anyway. And this week we've got a great video or a great live stream for you. I'm going to talk about using some of the short-term investment ideas that we talked about in our Friday video. I wanted to follow up on that video because these investment ideas, these short-term investments, do have the potential to make you rich or leave you broke. Okay, these are kind of like weapons of financial destruction if you don't use them right. You do need a strategy to be able to use each and really need to know how to use each. So I wanted to follow up on Friday's video, talk about the strategy that you can use with those and go a little bit more into detail into some of those. But check out Friday's video, definitely. I'll link it in the video description below. In that, I share the seven short-term investing ideas for 2021 that I'm following, that I'm using to really make those outsized returns. So we're going to get started on that real quick here. I just want to again personally invite you to join the Bowtie Daily. It's our daily market update that we put out by email. It's absolutely free, something I've been wanting to do for a long time, just started this year. And every day you're going to get the top stocks, the market trends, the strategies we're following, and all the news out of the market. And that's going to go out at 9 p.m. the night before, give you kind of an idea or give you time to plan your next investing day, right? So I've linked that in the chat. The link to that, I'll also put it in the video description below. Sign up for that. Get those daily market updates. They're absolutely free. And we got about 5,000 people getting those daily already in the last month. So it's a great way to make sure you're updated each day. So we're going to go over that. We're going to do Q&A after the video topic today. So stick around for that and make sure you ask your question there in the chat. Real quick housekeeping. Last week's videos, we did do that Friday's short-term videos with a little bit more detail into each of these. So today I'm just going to cover that strategy, add on that strategy idea, and how to think about 4 of these that I'm using as well. Next week, okay, so actually tomorrow, market holiday, so the market's not open, but I've got something for you to watch. We're going to come out with some EV stocks to buy, right? Electronic vehicles, huge theme over the last year, even over the last few years. And I feel like, a lot of investors are kind of rushing into just the most popular stocks here, just the Teslas and the Neos and things like that. And there is a whole universe of stocks, of electric vehicle stocks that can do just as well. And frankly, maybe even a little bit better right now because, you get the automaker stocks that have already boomed. Neo, I think, is up like something like 16-fold over the last year. And of course, Tesla is up about 7-fold, but hugely insane valuations are really at this point. So what I want you to do is with this video is I wanted to add some stocks and add a strategy for finding maybe some of the undiscovered stocks in that EV space. So catch that tomorrow. I'm going to be starting that tomorrow, Monday. Also going to start a Better Investor series of videos this week. We're going to start on the income statement. And this is really going to be a great series of videos. Going to cover a lot of the stuff actually that you learn in the CFA curriculum, the Chartered Financial Analyst curriculum. It's a 3-year intense self-study test, 6-hour tests every year. And it's really the gold standard for Wall Street training, for analysts on Wall Street. I've had my designation since 2011, and I love the curriculum for really teaching those investment ideas. So we're going to start with the income statement, what to look for in that, how to use the income statement to find better stocks, and we're going to start that Friday of this week. So now I want to get to that topic though, and I see everybody's joining the chat there. Thank you for being here again. But so Friday we covered those 7 short-term investment strategies that I'm using this year, right? And it was really within about 4 or 5 themes. We had futures, which kind of betting against the oil later on this year. Maybe when oil hits $55, $60 a barrel, it's close to that now and has come up. Most of the energy stocks are up 70, 80, 90% already in the last 3 months. Oil is up about 40%. The price of oil up over 40% over the last few months. And the idea here is that at $50 a barrel, most of the non-OPEC producers, so you've got your Exxon, Total, RDS Shell, a lot of these Western oil companies are profitable at that point. Okay, so they're no longer cutting back on production. They have that incentive to produce as much as they want. With these OPEC oil production cuts, right? So the OPEC nations, you got led by Saudi Arabia, Russia is in the OPEC plus group. They've agreed to take a lot of their own production off of the market to support those higher prices. Well, they're gonna have to rethink that here in the next few months as oil hits that $55, $60 a barrel, because basically they're just subsidizing profits of these other companies. So the idea here is that as the oil hits that higher amount per barrel, you're going to get some bad news out of OPEC. They're going to start bringing some of that production back online, and oil is going to drop. So using futures to possibly bet against the price of oil later on this year. Also talked about the dollar as well as some of these other commodities, and we'll talk about that in some of the strategies that we cover today. Also talked about option strategies, and we'll do an example here today as well. Penny stocks and Bitcoin. And so I'm going to talk about each of these a little bit here in a bit, but really what I wanted to spend the time on today was sharing a strategy for these kinds of short-term investments, right? Because I know a lot of you out there that you think this is maybe gambling, or you're going all in on these kinds of short-term investment ideas and that kind of thing. And it's the completely wrong way to play these, okay? These are short-term, high-risk, high-return kinds of investments that can lead to 40 and 50, 60% return and more within a few months, okay? But they can also destroy all the money you've got invested in it. So if you're all in, if you're fully invested in these kinds of high-return, high-risk investments, and especially if you're in one particular one, hoping for that kind of lottery ticket payoff, then you're going to be disappointed, because you might be able to do one investment or one of these strategies once and do very well, 40, 50, 60% return. But can you repeat it over and over and over again? And eventually you're just going to hit that bad investment that's just going to destroy all the money in there. So you really need a strategy for using these investments, this set of investments. And this is something we talk about a lot in those penny stock strategies that we talk about in kind of venture capital, so pre-IPO investing kind of thing. And it's that you want maybe no more than 20 or 30% of your money in these kinds of investments, okay? In these kinds of high risk, high return investments. The rest you can put in stocks, in bonds. Use that core satellite strategy where you have half of your money in just a handful of ETFs, of exchange traded funds that give you that market exposure, that broad market exposure. Then pick maybe 10 to 15 stocks you really like. And then 20 or 30% of your money you have for these lottery ticket investments, right? These high risk, high return investments. And you pick at least 2 or 3 of them. I know a lot of you are all in on Bitcoin right now, or maybe you're all in on Tesla or some of those other high risk, high return stocks. Well, the thing is, they work until they don't. Okay, I know a lot of Bitcoin investors very happy right now, but I also know a lot of Bitcoin investors that weren't so happy in 2018, 2019, when the price just absolutely fell apart. So these strategies, you don't want everything in just one strategy. Okay, so if you've got 20 or 30% of your money, so let's say you got $100,000 to invest, so you've got maybe $20,000 or $30,000 of your money in these types of investments, these strategies, right? And then you're going to pick at least 2 or 3 of these strategies, right? So maybe you do some penny stocks, maybe you do some option strategies and futures, or maybe you have Bitcoin. So 2 or 3 of these, and you have maybe 10% in each, right? So 10% of your total. So maybe you have a third in each of these 3 strategies. So that's gonna mean you have no more than 10% of your total wealth, of all your money, in each of these. All right. Now what that's going to do is, even if one of these just flatlines, right? If Bitcoin comes back down from about 35,000 per coin down to even even the 2018 peak around 19,000, that would still be, almost loss of 50%. It's not going to destroy your wealth. It's not going to leave you busted in the gutter. Okay. It's going to, so that if you had 10% in that and it fell by 50%, you'd lose about 5% of your total wealth, of your money. Right. So not a huge hit. But if and these are hugely these some of these strategies that we talk about, they can do 50%, 100%, 200, 2, 3, 4 times your money. So even if you only have 10% in one of these, if you hit that 3 times your money, that I mean you've just made 20 or 30% on your total wealth. So the strategy here gives you the opportunity to invest in these, make those very high excess returns, but not destroy your wealth if any single one of them don't work out. Okay, so that's really the way I want you to think about these high risk, high return investments. Any kind of high risk, high return investments you see, whether it's in those penny stocks, option strategies, the futures, Bitcoin, anything like that. That's how you need to approach it. Have a portion of your portfolio, a portion of your wealth set aside for it, and then use 2 or 3 different strategies for these. Okay, so now we want to go over 4 of these, the futures, the options, penny stocks, and Bitcoin. Kind of talk about some strategies, some ideas that I'm using, and work off of Friday's video, right? So if you didn't see Friday's video, again, check the video description below. I'll leave a link to that, and make sure you check that out because it really goes much more into detail into some of these strategies. But starting off with futures, and I know futures investing can seem complicated and be confusing, but it is a huge opportunity for those leveraged investments like we're talking about. You get futures for upwards of 20 times leverage, right? So I think the example I usually use is with oil futures because that's the one that I play in the most often. And so basically, each oil contract is worth 1,000 barrels of oil. 1,000 barrels of oil right now at $53 a barrel for West Texas Intermediate. So that's basically $53,000. But you only need, maybe I think it's maybe 7,000, right, to start that contract, right? So that's upwards of about 30 times, 20 to 30 times your money on that. And so basically what you're seeing here is that any kind of a move is just amplified so much. So like we talked about with that oil short trade, if oil gets to, $55, $60 a barrel, then I would be shorting the oil contract. And even a 5% move down lower, say OPEC comes out and says, okay, we're going to increase some of our production now. We're not going to be subsidizing these Western oil companies. Oil is going to crash at that point. But even if it only comes down 5%, that would double my money in these futures, in these oil contracts, right? But you can play the other commodities as well. Basically, the whole commodities complex, everything from agriculture, so grains, everything's, corns, grains. I think corn hit like a 15-year high just Friday. Okay, the prices for corn futures hit a 15-year high because of drought in the Midwest and there in South America, some of those growing regions, as well as buying, excess demand in buying. So you got commodities, you got the metal commodities, copper, gold, silver. They're all having a very good year. One on just specific fundamentals like the we saw with the corn and soybeans and wheat, but also with inflation. There is the expectation that inflation is going to pick up later on this year. The dollar is weakening, so both of those are going to lift commodity prices. Whether they be metals, energy products, agriculture, anything like that. So what you're doing is you're going into the futures market and buying those leveraged bets. You're going long on the commodities future. Also, the dollar is trending lower. Expectations are for it to be about another 10% lower this year against that basket of currencies. And this is one we talked about in Friday's video. But if you look at the dollar versus maybe some of the Asian currencies, like the yen, the Chinese yuan, or the Korean, right? The Korean won, I think it is. Asian economies doing much better as far as a rebound from the pandemic than the U.S. is. Australia as well, just because it's more directly linked to the Asian currencies and to the Asian economies. So what we're doing is we're buying those currencies versus the dollar and just really benefiting from that dollar trend lower. And again, I know it can seem confusing, but there's some great trades to put on just looking at that macroeconomic backdrop and the trends that we see in the market. So you can look at that. Options are another one, and options are a little bit easier to play for a lot of investors. It's a lot easier to understand. You're buying either a call or a put, or you're selling those and making those leverage bets. And the example that I want to use is Tesla here with a spread bet. And I love these. I love these ideas of spreads because you can get that leveraged return. You don't have to pay quite the money that you usually have to pay with some of these calls. So here we got the calls, the call and the put options for Tesla, right? And as we talked about in our options trading strategies video that we did a couple of weeks ago, you can buy options for weeks. I could buy options for that are just a couple of weeks out from expiration, months, or usually I like using the January options, right? So the January 2021 options just expired last Friday, so we got a whole year here for the January 22 options. That means if I make money on these options, then I can sell them when a year passes. So January 15th, 2022, I can sell these before these expire and use long-term capital gains rates for my taxes, right? For a lot of these other options, then if you make money on these options, then you're going to be paying short-term income rates on them. So it's definitely something you need to consider, and it's why I usually use these longer-term options when I'm thinking about my strategies. But anyway, if you wanted to take a leveraged bet for Tesla, right, up sevenfold in the last year, could do just as well this year, who knows? But you want to take a leveraged bet, and you go in and you think you're going to buy a call, right? Call gives you the option to buy Tesla at a specific price anytime between now and that option's expiration. So, for example, these $800 strike price, right? So this option right here, this call option, gives me the right from now anytime until January 21st, 2022, so next year, to buy shares of Tesla for $80. Now I'm going to pay that $262 to do it, right? So right now, that's a cost basis of $800 plus the $262. I'm paying more than Tesla's worth right now, but I get to lock in that price. Okay, I locked in that $800 price. So if Tesla goes above that $1,062, right, the strike price plus the last price, 800 plus 262, if it goes above 1,062, I'm making money on that, and I'm making that money on that $262 investment, right? That I just buy the option right now for the $262. I don't have to buy shares of Tesla for the 800 yet. I don't have to do anything with it, because as Tesla goes up, the price of those options is going to go up, right? So I don't even have to touch the shares. If Tesla doubles, let's say if it does a little bit better than double to $2,000 a share, right? Then this option right here, that's going to be worth at least $1,200, right? Because I've got the option to buy Tesla for $800. I can go directly into the market. I can go directly into the market right now or right then and sell it for $2,000. That's a $1,200 profit. So it's going to be worth $1,200. And I only paid $262 for it. So great option strategy, just those naked calls, just buying those calls. But every option is worth, I'm going to go ahead and ban someone here from the chats. They're just, replace, report, remove. Okay, this Jonathan trade. Come on, dude, don't spam my chats. Be a man, do your own content, do your own stuff instead of trying to spam someone else's chat and get people to join you on Instagram to make $12,000 a month. It's obviously a scam. You're pretty much lowest form of human life out there, and I don't want you in my chat. I don't want you in my community. So see you later. Anyway, so we go back to this option trade, and so you can make a lot of money on that, but each option contract is worth 100 shares, right? So if you wanted to buy this option contract for $800, or this to lock in the $800 per share price of Tesla, you would have to buy 100 of these. 100 times $262. Okay, so most people don't have 26 grand to just plop down on an options bet on Tesla. So what you can do here is do an option spread. Okay, so this means you're still going long that you're still going long that share or that option contract of Tesla. You're still paying the $262 to lock in shares of Tesla at $800 over the next year. But then maybe you're going down to this 850 and you're selling that contract. Okay, so you're selling someone else the right to buy those shares of Tesla off you for $850, and they're going to pay you this $245 each. Okay, so now what that does is, yeah, it's going to limit your upside a little bit. So if, like we said, if shares of Tesla zoomed to 2,000, you were able to sell that other contract for 1,200. Then that's that's a 1,200 divided by 262. That's a 4.5 times return, right? But with this, you're buying that contract for 262 a share. Someone else is buying this other one off you for 245 a share. Your net cost is only $17, right? So again, if you go in, you buy this 262, you buy this 800 strike price share option for Tesla, you immediately sell this 850 to someone else for 245, you're only paying $17, right? $17 times times 100 for 100 shares for one contract. So it's only going to cost you $1,700 to go into this investment. Okay, much more affordable for most investors. A way to play in Tesla options without being rich, right? Without having all your money in that. Well, now what happens here is you've got you're buying shares of Tesla for 800. Someone is buying them for 850 from you. So you got that $50 spread, right? So you're in it for 17. You got a $50 spread, and that is still a three times return on your portfolio or on your investment. Okay, and now Tesla only has to go to 850 or above to make that 3 times return, right? So options are be very much a leveraged bet. And then these option strategies that I talk about, that spread strategy, can be even more leveraged on your money there. So here, a chance to get a 3 times return on those shares of Tesla on the call options for just $17 a share on the contracts. Okay. So definitely a strategy to check out. Check out that option or that video Friday for more detail on option spreads. Penny stocks. Wanted to share just a couple of things I'm looking for in penny stocks. We did talk about some penny stocks Friday, and we've had a great year on penny stocks, right? Some amazing returns. Shares of Veritone, I think, are up 300 or 400% since we recommended it in I think that was around August that we did. Plug Power is up like 7-fold, 8-fold. Telluride is another one that we've been in for a while and have made really good money on it. But for penny stocks, you need to understand you're not going after every penny stock that you hear about, right? You can pick your bets. I wouldn't have more than maybe 5 or 10 penny stocks in my portfolio, okay? So you're looking for that addressable market size, a very small company, I'd say under $500 million market cap, that has a competitive advantage in their product and can break into that market that's, $2 or $3 billion at least, right? So you're looking for those companies that can be the market leader someday, but aren't quite there yet right now. So check that out. Bitcoin, lastly here, and then we'll open up to some questions here. Bitcoin, don't be afraid to miss out on any investment. That goes for Bitcoin. That goes for electric vehicle stocks. Any hot investment, right? Whatever the investment du jour is. I see a lot of people, kicking themselves that they heard about Bitcoin or they had friends in Bitcoin a few years ago and they didn't get in and now they missed out on all this money that they could have been rich. Folks, nation, you're always going to miss out on something, right? Hindsight is always going to make you an idiot. You're going to make you look like a fool because you only look at the ones that you could have made millions of dollars in, right? So I could have bought a lottery ticket, and if I would have looked at the numbers that came up last week, if I would have bought a lottery ticket with those numbers, then I'd be, almost a billionaire right now. But how the hell did you know? How the hell would anybody know? I'm guaranteeing you, 2019 when Bitcoin fell from that 2018 peak of around 19,000 down to about 4,000, nobody was talking about missing out on that. Right? You don't know when these investments are going to fold. Okay, so don't be afraid to miss out. Use that rational investing ideas. Use your own valuation on stuff, and just wait for your opportunities, right? You don't have to be fully invested at any time. You don't have to be fully invested in any one particular strategy at any time. Pick your strategies over 30 years. You only need maybe 4 or 5 great investments over 30 years to be rich. Okay. If you would have waited, if you had been in Bitcoin in 2018, or be looking at Bitcoin in 2018, you would have waited. Okay. Bitcoin came back down to 4 or 5,000. Great investment. You get into it then, and you could be up 10 times, tenfold on your money, right? That alone would have made you a ton of money, would have made you insanely wealthy if you put enough on it. Then you get out now, wait for it to come back down, and pick your bets. Okay, so don't have that fear of missing out on any investment, right? Myself, I have been in Bitcoin off and on. I'm waiting for those times. I wouldn't be in Bitcoin right now, just because the valuation technique that I use, that Metcalfe's law that we talked about on Friday, that says Bitcoin is worth really right around 17, maybe as high as 25,000 each, and that's based on that network valuation, right? And that's a great valuation tool you can use for any kind of network-based model or platform like Bitcoin, like social media stocks, anything like that. The upside is undeniable for that long-term blockchain adoption, but I just wouldn't be in it here, right? So I'm waiting for it to come back down to maybe 20, 25,000, and then I'll put money in for that long-term investment. So I want to open this up to